Welcome back. We are back on the stocks again. I took a little short break and went to a different style of video. And you guys talked me into it in the comment section. So we are back into stocks again. And like I've been saying in the previous videos, the first video I talked about getting your personal finances in line, having balanced goals, picking the right brokerage. And then we did a video touching on the basics of a stock chart. I'm going to go back and do another video about a stock chart because that is so vitally important. You must know how to use a stock chart if you're going to be buying and selling stocks. I cannot stress that enough. If you're not getting the information you need from me, from this channel, on how to properly read a stock chart, go watch another video, read a book, do your own research. I know I'm probably not the world's best at explaining everything, but if you're really interested in it, and I take no offense out of it, it took me a long time for me to figure out how to read stock charts as well. Just remember, stockcharts.com has the best stock charts on the internet. In my opinion, I have not found anything better. But do yourself a favor and take, Google search and YouTube search and everything you can do to learn how to read a stock chart. If you're going to get into doing buying and selling stocks, ETFs, or mutual funds, or a combination of those, they all work the same. They all work off of a stock chart, and you can predict, to the best of your ability anyway, what a stock is going to do by looking at a stock chart. So please, 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 please learn how to read stock charts and learn everything you can about a stock chart. Like I said in my last video, the way I set it up is to put a RSI on top, put your what they call a MACD, MACD, MACD on the bottom, and do whatever. I use candlesticks myself, but if you want to use whatever for your charting, there's all kinds of different things. There's line graphs, there's everything. And we'll do more videos about that to show what that's about. But I just wanted to touch again on what has been said up until this point, and stress. You must learn how to use a stock chart. Do not get into buying and selling stocks, ETFs, or mutual funds unless you know how to read one. And be very confident in your ability to read one. If you don't, let someone else invest your money. I mean, I'm being very honest with you. Don't play around with it because it will bite you. Now, there are some things that I'll get into in a later video where you can invest and you don't necessarily have to learn everything there is to learn about a stock chart. If you're, say, 18 years old and you're just wanting to throw $1,000 into an ETF or a mutual fund and you're wanting to let it ride for 20 years, okay, something like that, you don't have to learn how to read a stock chart every single day and keep up with it. You can just log into it, hit the high notes on your stock chart and move on. You're letting it ride for 20 years. This stock chart thing is for more medium level medium term investors, that are holding a stock for 6 months, I'd say a month to 6 month period, or a stock trader that's wanting to be more active. Now, that brings me into the subject of today in today's video: day trading, panic buys, and panic sells. These all go together. Now, I think a lot of people have a misconception of what a day trader is. I do. They think, well, you go in and you buy a stock during the day. No, that's not what a day trader is. Well, you go in and you sell a stock during the day. No, that's not what a day trader is. A day trader is a very specific type of trader. It is called also a pattern day trader. What that means is you're buying a stock, say, at 10 o'clock in the morning. You're selling that stock at 11 o'clock in the morning. You're buying it again at 11:30 in the morning. You're selling it at 1 o'clock in the afternoon. You're doing this multiple times a day, and at the end of the day, you're closing out. Or if you think that it will come up the next day, then you'll let it ride overnight. More than likely, you're putting your money in and you're pulling it out in one day, and you're making multiple buys and multiple sales of one stock in one day. Take, for instance, this stock that I just bought on Friday. I posted in my community tab. This morning it went up to, I think, 15.79%. Right after I posted that, it went up to 26%. At the end of the day, it went back down to 5% gain for the day. See what I'm saying? I could have taken that stock and I could have bought it today, made 15% off of it, sold it, wait for it to go down, bought it again, had like a 20% gain on it, sold it again, and been done for the day. And I would have had, a 15% gain on the money and a 20% gain on the money. There's a problem with that, though. You have this government agency. I was just looking it up. The Financial Industry Regulation Authority. It is a self-regulatory organization that oversees brokerage firms and exchange markets in the United States. It works to ensure the integrity of the U.S. financial system by protecting investors and preserving market integrity. They have rules that tell you cannot buy and sell a stock multiple times in one day, several times a day, during a 5-day period. Because if you do that, you will become what they call a pattern day trader. These are people usually that are in financial institutions, and they are trying to manipulate stocks and manipulate the market, and they're trying to dump a bunch of money in, dump a bunch of money out. That is also why the U.S. Security and Exchange Commission was formed. It was formed back in, I think, 1929 by Franklin Delano Roosevelt, because that's what happened to cause the Great Depression, the stock market crash. People were going in, dumping a bunch of money into it, pulling a bunch of money out, and it caused the market to crash. They don't want to do that again. So if you do this, you are considered a pattern day trader. In order to become a pattern day trader, there are rules, and there are several rules that you have to abide by. Don't just take my advice. Don't just take my information here. Look around at other places and get your total information. The gist of it is you must have a minimum of $25,000 into your account. Minimum. You can have as much as 5 or 10 million or whatever your brokerage will allow you to have. But you must have a minimum of 25,000 in your account, and you must have what is called a margin account. And a margin account is where you borrow money from your brokerage in order to buy stocks. And that opens up all these doors to where you can go in and buy multiple times a day. You can sell multiple times a day. You can buy and sell the same stock 100 times in one day. Sell all of your shares at the end of the day, go back the next day and start doing it all over again. That is exactly what happened to this stock that I owned. It went up 15.8%, and it went up again 26 point something percent. At the end of the day, it fell down to 5%. And you go, well, why didn't it just keep going up? Well, because so many people were buying in and so many people were selling out. There were so many day trades happening. It's not just day traders, though. There's a lot of people like me that bought it on Friday. And I put money into it on Friday. And then Monday, it went up. Now, I'm not saying I caused it to go up. I looked at the stock chart and I saw that it was on, this uptrend, that it was going up. So I put in my community tab, was I foolish for not selling it today and taking my money, taking my profit out? Maybe. It depends on how you look at it. It depends on how you look at it. If I was wanting to do just a really, really short-term gain, and I wasn't going to buy this stock again, and I wasn't going to sell it again, and I just put all of my money in it, and it went up 26%, and I said, hey, I want my money, and I pull it out, I sell the stock and I pull it out, what's wrong with it? Nothing. The problem is, you can't change your mind and immediately go back in and buy it again, and then immediately go back in and sell it again. Because you do that over and over again, they're going to tag you. They're going to find you out, and they're going to tag you, and they're going to say, nope, you can't do that. You're not listed as a pattern day trader. You don't have $25,000 in your account. You don't have a margin account, and you're not doing this. We're not going to allow you to do it. You're not manipulating the price of that stock unless you abide by the rules. So what I'm going to teach on this, or what I'm going to talk about rather, on this subject of investing and everything, we're not traders. Okay? We're not traders, we're investors. Completely different term. Completely different term. I used to be a pattern day trader. I did. Back in 2007, 8, 9, 10, I was a pattern day trader. I had the $25,000 in my account. I had the margin account. I could borrow against my brokerage. And I would get up in the morning. Every morning when the stock market opens, they have a bell ringing. I would be up and I would be ready for that opening bell call. Ding, 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 and here went the market. It was just like a horse race. And here I was typing away on the computer. I had all my stocks set up, that I was wanting to look at. I did all my research. I was ready to buy. I had my triggers, and I was click, 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 pop, pop, pop all day long, buying and selling stocks. And I got myself in trouble, as does most day traders. You can believe whatever you want to believe. People can argue with me in the comments. You can call me whatever you want to call me. The truth of the matter is, I would say probably 90% of day traders lose their butts. They lose their butts. Why? Is because panic buys and panic sales. Just like what I was saying about this stock that I bought, it went up 15%, it went up 26%, and then at the end of the day, it went down to 5%. That pisses people off. They get to thinking about it, and they're like, man, I left a lot of money on the table. You know, I could have sold that thing at 15%, waited for it to drop a little bit, bought it again, went up 26%. I could have made money twice in that one day. And instead, I just held it and it only went up 5%. Remember what I was talking about in my first video about not getting greedy? Remember that video that I put out? Don't get big-headed. Don't get arrogant. Don't get greedy. Don't get to thinking that you know more than what you actually know. How do I know this? Because this guy was a big-headed, arrogant idiot. And I thought I knew it all. I thought I knew how to just go through and wipe this account out and then put it all back in there, wipe the account out with buys, is what I'm talking about, sell everything, pull my money out, and at the end of the day, be grinning from ear to ear. I made $100,000 today. You know the reality of it? I was losing my butt. I was losing my butt. I started getting margin calls. And what margin calls are is when you do this, you get so greedy, and the brokerages know you're greedy. That's why they want you to get on the margin account. Because when you lose big. And they profit. Because when you borrow money off of them, not only do you have to put more money into the stock market to get your balance up, you have to cover the margin call too. So you have to pay them a percent. So they win, 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 and you lose, lose, lose. Yeah. Been there, done that. Got the t-shirt. I don't want to go back. I wanted to explain this because we are not day traders. What do I mean by that? You and I, people that are following along with me, people that are doing this with me, that are learning this with me, you're not a day trader. If you become a day trader, I'm not coming with you. You're on your own. Because I'm not doing that. I will never go back to that again. I don't care if I have $100,000 into my account. I will never go back to day trading again. Because greed is what drives you when you're a day trader. It is absolute 100% greed. And I can't be that person anymore. I just cannot be that person anymore, to where my whole life is getting up in the morning at opening bell and hitting that computer and just taking off and buying and selling and buying and selling and buying and selling and buying and selling. And this one lost 15%, and this one gained 30%, and this one lost 5%, and this one gained 10%, and just sitting there fighting and fighting and fighting and fighting with it, trying to hammer out a profit. Not doing it anymore. If I only make 5% a day, it's good enough. It's more than you can make at the bank. Go check your interest rates at the bank. Go see how much it is for a 5% yield, or a 5-year yield, not 5%, but a 5-year yield on a CD. You can put your money in a bank for 5 years and you won't get 5% a day. You won't. Don't be greedy. Don't think you know it all and how to make it all and how you're going to just instantly transform your life into being a millionaire overnight. That's what all these investment people out here, that's why they're blowing up with advertisements and do this and do this and buy this stock and buy this. That's why they want you confused, folks. So you dump all of your money into it and you come back to driving a truck because you're broke. That's what they want you to do. We're doing it a different way. We're doing it a different way. We are going to know what the stock is. We're going to know where our triggers are to buy. And we're going to hold. You know, I like watching old military movies from time to time and, you know, studying military stuff. I don't do it that much anymore, but I used to a long time ago. You know, and there was an old saying back in the Revolutionary War, because they had musket guns, you know, and they didn't shoot very far and they weren't accurate. They would say, wait until you see the whites of their eyes. Or they would say, you know, whenever the opposing force was coming at you, they would say, hold, hold. And everyone would get antsy, you know, ready to fight. And the other was coming and coming. And they were like, hold, hold. And, you know, everyone was like, what are we holding for? Let's go. They're coming at us. And then they separate the troops out and there's a cannon there and they shoot the cannon off. You know, they've got a game plan. They know what they're doing. That's what I want us to be. That's what I want us to be, is we're going to hold. We're going to wait. We're going to know what we're doing. We're going to know how we're going to go about this. And we're going to have a game plan. And we're going to know how to read our stock charts. We're going to know what stocks to buy. And we're not going to get greedy. And when we get a little bit of profit, we'll sell. And if the next day the stock goes up after we sell, hey, it's okay. It's all right. Let it go up. Let somebody else make some money. We got ours. We got ours. We may only get 5%. We only may get 10%. We might get 20%. That's okay. Hey, 20% on a stock is pretty dang good, folks. I'm telling you from someone that was in it every single day, 8 hours a day, 5 days a week. 20% is pretty good return on your money. Pretty dang good. And if you can do that multiple times, you're doing really, really well. Really good. I'm just wanting to put this video out to establish, you know, again, don't be greedy. Don't get conceited. Don't do this, you know, panic buy, panic sell. If you know how to read your stock charts, you know what you're doing with it. You know how to get in. You know how to hold and wait and hold and wait. And then whenever you get some money, you pull it out. And you don't just go blow it, you know. you hold your money again, start looking for your stocks, go through this cycle again, try to find you another stock that's ready to buy. It's in prime position, ready to go. And then you buy it again and you hold it again. Now, you might hold it one day. You might hold it a week. You might hold it a month. Like I said, if you're just wanting to put money in and hold it 20 years and just let it set and grow, there's nothing wrong with that either. But that is what you call an investor. That's why I named this category trucking and investing, because we are investing for our future. We're not doing panic buys. We're not doing panic sells. And we will never, ever be day traders. Never, ever be a day trader. And I'm sorry if you disagree with me, but if you take off and you decide, I'm going to be a day trader because I know more than Dave over at Trucking and Politics, you're on your own. I wish you luck, because I've been there and I know the stress of it. Not saying I was the best day trader in the world. I'm not saying I was the worst day trader in the world, but I was there and I did it, and I regret it. I wish so bad that I would have had the mentality to calm myself down and say, we're just putting this money in and we're just going to let it ride for a little while. If we start looking like our stock's getting a little shaky and a little weird looking here, then we can pull our money out. We can take our profit out. I wish I could have waited. I wish I could have had that mentality to sit and wait for it. But I was wanting to turn $100 into $1 million in one day, and I burnt myself out. You know, instead of building my finances, I destroyed my finances. And we're not going back to doing that. We're not. We're going to be building. We're going to be investing. We're going to be laying a foundation that is rock solid. And then we're going to start building the walls and putting the windows in and putting the roof on. And we're going to build something here. That's what we're going to do. Investing, not trading. We're never going to trade. We're never going to be day traders. It's too risky. It's too crazy. Too crazy of a thing to do. So we're not doing that. So hopefully this cleared everything up. We will get back on track to doing other videos about, reading the stock chart, getting more in tune with that and everything. I just wanted to clear this up about day trading and panic buys and panic sales. Look at me, what I did. I bought this stock Friday, went up again, went down. I still got it. I didn't sell it. I still got it. Why? Because I think tomorrow's going to go up again. How about that? And how do I think that? Because that's what the stock chart says. Interesting, huh? Anyway, you guys be safe out there. Watch out for each other. Take care of yourself. And we will catch you on the next one.